Hey everyone, welcome back to Corporate Decoder, the place where we try to understand what companies are really up to, even when they're trying to bury the truth in accounting jargon. Today we're cracking open DallasNews Corporation's latest quarterly report. And trust me, there's more than just old newspapers hiding in these numbers. Buckle up as we decode a surprising real estate deal and a major shift in how they're handling pensions. First off, Dallas News, that's the company behind the Dallas Morning News, filed their report called a 10Q with the Securities and Exchange Commission. It's basically a financial checkup for the first 3 months of 2025. They're a smaller reporting company, which means they don't have to jump through all the hoops that the big guys do, but we're still going to take a look. Let's dive into some numbers. Their advertising and marketing services brought in about $10.8 million, but that's down from $11.6 million the year before. So they are making less money from advertising than last year. For circulation, that's newspaper sales and subscriptions. They pulled in $15.4 million, also less than the $16.3 million. Also less than the $16.3 million, also less than the $16.3 million, again down from the $3.1 million to $29.1 million. To $29.1 million 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 to $29 million to $29.1 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 million to $29 million to Now, what did they spend money on? Employee compensation and benefits cost them $14.8 million, less than the $16 million from last year. Other production, distribution, and operating costs were $14.6 million, slightly down from $15 million. Newsprint, ink, and other supplies cost $1.2 million, very similar to last year. Depreciation, the wearing down of their equipment was at $340 million, very similar to last year. Depreciation, the wearing down of their equipment was at $344,000, again smaller than the prior amount of $344,000, again smaller than the prior amount of $398,000. Here's where things get interesting. They had a gain on the sale or disposal of assets of $36.2 million. This is because they sold off a major property we'll talk about in a bit. Add it all up and their total operating costs and expenses actually become negative, coming in at negative $5.083 million due to that big asset sale. All that trickles down to a net income of $28.2 million, a huge leap from the loss of $1.3 million the previous year. That translates to earnings per share for each share of $5.28 compared to a loss of 25 cents per share last year. Looking at the balance sheet, cash and equivalents jumped from $9.5 million to $44.1 million. This is thanks to that major cash infusion from the sale. Also, accounts receivable, that is money they are owed, decreased from $10.6 million to $88 million, $88 million. Total assets jumped from $61.8 million to $88 million. Total assets jumped from $61.8 million to $88 million. Total assets jumped from $61.8 million to $88 million. Overall, this looks much better because of the land sale. On the liability side, accounts payable, the money they owe, decreased slightly. Their total liabilities decreased from $55 million to $55 million to $52.6 million. Meanwhile, total shareholders' equity increased dramatically from $6.8 million to $35 million to $35.3 million. The company has an accumulated deficit, which simply means they have lost money in the past. That deficit decreased from $437 million to $409 million. Switching over to the cash flow statement, we see that net cash used for operating activities, that's the day-to-day running of the business, was negative at $3.5 million, but was also negative last year. Net cash provided by investing activities was neutral this year compared to using $856,000 last year. So what's Dallas News really up to? They're facing the same headwinds as the rest of the news industry. Print is declining and digital is a tough fight. But here's the story. They had a smart fire sale and a financial cleanup. Let's talk about that printing facility. They sold their old Plano printing plant. They said that the plan is to streamline printing operations to a smaller leased facility, and what smaller means is about 67,600 square feet. This is resulting in laying off 70 employees, so about 13% of their staff. Those are not easy choices, but sometimes necessary for survival in a changing market. Now, I mentioned that sale injected a load of cash into Dallas News, but what are they doing with it? Here's a big thing. They announced they're going to fully fund their pension plan to purchase an annuity contract. What that means is that they're handing over responsibility of all pension payments to an insurance company in exchange for a lump sum. This simplifies the balance sheets greatly. The rest is more standard corporate stuff. Legal proceedings that they don't think are a big deal, and a report of their two business segments that are TDMN and agency. The company also has a corporate and other category that includes unallocated general corporate expenses, as well as costs that are not associated with the segments, and which includes corporate debt. Headcount decreases 70 when compared to last year, so their team has shrunk over the year. One of their announcements is that they will be pausing dividends. They have long-term lease liabilities that they need to pay. And in the future, they will need to be more clear in reporting where they are earning their money and how they are spending it. So what's the verdict? Dallas News had a rough quarter operationally. Revenues are down across the board because of their line of business in the face of tech and the internet. The shining light this quarter comes from the sale of property, but with traditional revenue falling, they will continue to be under pressure to lean into the areas they have available.